All right, good evening, guys. Ken of Tortoise Capital Nightly Strategy Podcast for Friday night, September 22nd, 2023. We'll get started with the hybrid trading 30-minute chart portfolio in the usual way, starting with Alcoa, 30-minute chart. No trade today, too choppy. AI initiated this is really a COTA 2 because you have a 1, 2, 3. The collapsing dragon entry would have been about here. I front run that a little bit right here. That's why it's a COTA 2. The standard works out just nicely to the PSAR flip. And that thing closes poorly. And we're holding about 2R. And I'm holding that one over the weekend, one of the few. Amazon, no trade. Caterpillar, no trade. Cliff. So yesterday we had two efforts on the short side, both of which kind of reversed pretty quickly. Today there was a gap up above the PSAR flip, so I initiated the COTA 2 with a standard risk and holding this one with about 2R over the weekend, and tomorrow or Monday I'm hoping to see it get up into that region to test. That's where I will add a second position. I think of that as a COTA 2 because you got this double bottom and that move. And this is a pretty compelling channel. And I like the fact that this time the buying pressure came in here, whereas the last two times buying pressure came in here. And in both cases, there was very strong upward potential. So to me, that's the channel. The 10-day range, which is here's the 10-day high and the 10-day low. That's the channel. And we got this one at about just below the 50-yard line, and it closed really well. So I like the chances. That was a reason to hold it over the weekend. CVS, the long grind to the 10-day high, couldn't break out. It's really had 1, 2, 3, 4 opportunities to break out, and it didn't. And today it PSAR flipped. So I was getting ready to exit this thing, and then the bottom just fell out of it. And this just feels like everybody that was long in here gave up on it. So I think there's a good chance for it to get back to this region, the 5-day low next week. So I will, because it closed so poorly, I'm willing to hold that one overnight. Dish Network, no trade. There was a kind of a stealthy, quiet short inside there. It just didn't grab me. Dish is consolidating nicely. Now I take this to be a very positive sign that we've had such consistent selling pressure for 10 days, and we've actually had the last 2 days extensive intraday selling, and today it did nothing except quietly just hold on. So that tells me this is a critical state, and I'm ready to play that in either direction. It fought its way all the way through the Red River today, and that's a check mark to the upside. So I like this one as a stealth candidate for next week. Devon Energy, beauty. Electronic Arts took the SSC. It really didn't follow through. The RL10 rolled over. I took the exit in the Dragon for about half an hour. Now, subsequently, going into the close, the bottom fell out. So if it breaks below like 119, then I'm ready for it to collapse. So I was happy to take the gift. Emerging markets. This is one you can see why I'm so leery about holding this one overnight. The big gap here, another big gap there. This one can just murder you on the gaps. This one, I saw the big gap up. I thought there was a chance for it to get up into here. It rolled over. I think I stuck around too long. I took the -1. I took the revenge trade. It gets about half of that back. And again, I don't want any part of that over the weekend. So we'll just take our lumps and say, you got me this time. Ethereum, this is, I think, attractive for next week. This, it's harder to get a tighter consolidation than that, especially after this move down and after that move up. I mean, that is just making you wonder what is going on. Compound critical state, get ready to play that in either direction as a high priority top 3 for next week. Mexico, there was a slight decay. I couldn't trade it. Brazil also showed weakness and closed poorly. No trade for me though. Intel, slow decay in tech. That was a disappointment for the week ahead, but I like the fact that there was no selling pressure either. So this may also be the waiting game just to see what are we going to do, break out one way or the other. I think that's a high priority next week. I feel like tech is ready to recover. International paper was the carnival today. Caught a 2 entry after the gap up. It runs all the way up to a new 5-day high. And then on the sell-off, I'm out and I take the 2R. So that's a +2 in about an hour. And then the sell-off continued and the RL10 rolled over. You got a 1, 2, 3 entry. I speculated on it. It gave me this and then started rebounding, and I was happy to take another +1. So that was kind of the tactical fireworks for today. International paper, the aggressive, volatile trading instrument. Who knew? Real estate. So yesterday's great pain and suffering stabilized, but then the PSAR kept decaying. The RL10 rolled over, so I gave it a shot, and then the bottom just dropped out of it in the last half hour. So I think that there's more downside, and I'm holding about 3R. I was willing to play that because this one can be gappy. So this would not surprise me to see a gap down and then a recovery on Monday inside real estate, IYR. The fact that that's not a groovy high-tech equity is what makes that one such an interesting swing trader because it represents a whole sector, U.S. real estate. So I'm really liking that one as the next leg down. That could really be interesting. So if I wanted to make an estimate of where that thing could go, I'm on the 30-minute. I could go up to the 2-hour and look back and see, man, it's getting close to the 150-day low. And you'll notice that there's no, from this level, when you go back this way, there's no resistance. This thing is in free fall to the 150. So that is a reasonable thing to play. And I want you to notice the size of those legs when it swings. Those are significant. If I go up to the daily, that just kind of reinforces that whole thing. Really, the support level is over here at 79, and if that collapses, it's down to 75, and that's the bottom of the real estate market, just falling out. If we look at 3-day, same thing. That's just horrible. And the 9-day, yeah, that's as bad as it can be. This is either the mother of all value plays right here, If this approximately holds, then you have this entire that recovery to work on. But if that fails, the collapse takes you all the way back to the COVID. And the statistically significant level is right here at about 68. So uh, that's everything you want in a compound critical state. Massively interesting. So let's look at the, while we're here, maybe we could look at the RLFF. Yeah. So when I look at this, the, you know, first I want to look at the RL270. And this thing has put in, some recovery after that big long sell off. The fact that you had these two recoveries is what puts the bottom in on the 270. But the warning from the RL90 here said, hey, be cautious, be cautious, be careful. When that rolls over again this time and it breaks through that ribbon, you got to believe that that this thing is really vulnerable. So that's how you read this red ribbon or that gray ribbon. That when that breaks through like that, that's really painful. And the fact that you've got these lower highs. Now, acknowledging that even in the downslide, these upward moves, have some power to them and are tradable because of the U.S. real estate. Everybody's always trying to buy that asset as a hedge against the broader equities. You want the intrinsic value and the income that comes from real estate. But this is really massively important right here. That is the definition of a compound critical state right there. And so from 84 to about 80, you're really talking about a $5 broad-based risk. That's about a $5 risk inside here. So if you just treated that as your risk box, let me put that in blue so it's even more obnoxious looking. You could play the recovery or the collapse and then just using that standard $5 risk. I think you'd be pretty happy with that as a long-term position player. So this is a way that we can move from the very tactical setups all the way up to long-term. So we're looking at the dailies. If I look at this on the 3-day or the 9-day, again, you got even on the 9-day, using that same frame of reference, you got the 90, the 270 pointing down. These are already well below the ribbon. So you can see right now, that is the support level that just got breached today. And this is where it comes to the COVID. So very interesting times in IYR. Let me know if you found that helpful. All right, so we're back to the 30-minute. Yeah, and now you can see why, in context, this is such an interesting and really a low-risk idea. I mean, we've got markets money right here. That was probably 15R yesterday. So you can put some of that just into the reentry as a low risk. And today, that was rewarded when it broke through the collapsing dragon in that last half hour. This gives you 30 minutes to make the assessment of, is that something I want to hold? I could have probably should have, in retrospect, added an extra position in there if I was that persuaded by it. On the other hand, a lot of folks will look at this and say, was that the exaggeration? Was that the exhaustion collapse? Well, that's nothing like recovery and support and stability. So there's still a couple tactical days left in this, and I would expect the entire, real estate focus folks evaluating the entire sector. And Lou points out could do the same thing with the S&P. Yeah, you do this with every one of the big broad sectors, but IYR is especially interesting because it features this and the fact that it's so close to the 150-day low. But that same fractal approach is what we mean by fractal framing compound critical states. Now here's one. I took a speculative play in the other direction on KRE. This one has also experienced kind of that downward move. But this is a case where today it actually held support and this long slide actually flipped. And I'm willing to use market's money for this one little piece, thinking that we might get that. But if it breaks below 41, I just take the 1 hour hit and stop and reverse and go the other way. Yeah, to Lou's point, what I just demonstrated on IYR is the multi-lens analysis, where we're looking at different time frames through many different lenses. The RLFF, the support and resistance, RLCO framework, 4 seasons of MACD. Multi-time frame, multi-lens analysis is the general concept. Multi-time frame. So what I did was I went from 30 minutes all the way up to 9 days. And then I used the regression line fractal framework, the RLCO patterns, support and resistance, 4 seasons of MACD, and there's another one. Yeah, pinch and stretch. Those 5 lenses plus each of these different time frames gives you this matrix approach of multiple times and multiple lenses that gives you insights into its overall condition, and that allows you to certainly see both sides of the market. You'll see that, Lou, examples of that in the Foundations course too. McDonald's, no trade. I like the stabilization of it today. Merck, no trade. Microsoft, it continued to decay today, and that was not a vote of confidence for the long side. Marijuana, I took the SSC for a fraction. It showed no signs of breaking out further. What I was looking for, to be willing to hold this over the weekend, was I was looking for a return to this price level. So I was looking for this just to continue to do that, but it just instead gave me this sideways. And so that failure to follow through, that's information. And so that was a reason to get out with a little bit of walking around money. NVIDIA, this was more sideways chop. What's tentatively encouraging is that this move here, it didn't break any further. It didn't break further. It didn't follow through, but at least it went sideways and it ended the slide. So this could be that compound critical state starting to form, and again, ready to go in either direction. No trade today, but it is on the radar for stalking. Clean energy, this one showed no signs today of overcoming this move. And when it collapsed below the collapsing dragon, I took it. When it broke below this one, that sort of reinforced my consideration, and that let me hold on to it here. It didn't flip the PSAR, it just barely got back to the dragon and then reversed. So I'm willing to hold this with 2R in hand and looking for more continuation early next week. Rivian, this just failed like you wouldn't believe. That's an intraday collapsing dragon on the swing, and there is no support in sight. So this thing is just falling, and it closed poorly, and I'm holding 3R. I'm liking that one. Boy, I'm sure liking that one. So let's do the time frame. I'm going to just leap ahead to the daily. So the next support level on this is here. Call that 20. So it's got that, and if it fails this test, there's no support at all right here. The next support level is all the way down at 15. So that is a disaster in the making. Look at all of the buying pressure where they were trying to get this back up to the glory days. All of that failed, and for 5 days straight, this has sold off, and then the last day was the collapse. So only the bitter enders are holding that. If they fail, watch for this to be a big fail. If that doesn't fail, then boy, you sure do have a nice buying level for a potential move here. So Rivian should be on your short list for all next week. You can see the S&P on the daily. 2 days of further collapse. It took out yesterday's low after an effort to move it up with a gap up. It failed more. It is below the key support level. So now this is part of that move that I said to 415 is being threatened. So that's not good. And you can see on the 30-minute that there was even that little last hour of buying pressure immediately collapsed tactically. Almost a trap. There was a nice recovery in treasuries. The intraday treasuries, guys, really, really like that. If you want to see a nice intraday move out of a compound critical state, I mean, yesterday set up this support level here. That's what it looks like on a 30-minute. If you're a treasury trader today, that was as nice and easy a move of steady buying pressure and holding it well above the VWAP. Look for a continuation on treasuries if you're a treasury trader. Tesla, this was a collapsing dragon. Entered it because of the rules, and then there was nothing that made me get out of that. Nothing. So I'm going to hold that one over the weekend with 3R in hand. I would not be offended if you decided to cash that one so that you're not exposed to Tesla gaps, but that one felt like there's a little more in there. Finally, U.S. Steel. This had a COTA 2 entry. It gapped up and then continued to go, so I just said, why not hold my nose? There's the risk. It closed really well, so that's at +1. It's testing this one, and that shows some signs of recovery, so I kind of like that one. Let's go to sniper trade of the day. So this was Rivian. We saw how smooth and orderly that was on a swing. This was the close. There was a gap and a reversal. That's the OR3. It broke down below there, so we captured 1R. There was the reversal to the upside. That captured +1. Just playing the rules. That captured about 1.5. That one captured 0.5. So it just kept playing it. This is a caught 2 to the downside again because you got a high, a lower high, and a PSAR flip. And we're holding about +4 in markets money already. So, I'm just using markets money to fund that. And then the bottom falls out of it. There's a 2R battle drill that is also a collapsing dragon. This is a 4R battle drill. That's a 6R battle drill. And at that point, with 4 positions in and it reverses that much, I want to keep the fourth one in the money. So the first position earns 1, 2, 3, 4, 5R. This one holds 3R. This one holds maybe 2R, and that one's a scratch. So we get 10 out of that series. Not even playing that move. So 4 from the grind and 10 from the stampede. Just following the rules. And in addition, this funds the swing trade in Rivian, which looks like this. Why don't I get out at 2 p.m.? Why don't I get out at 2 p.m.? Why don't I get out right there? Because I'm about 10R in hand, and the market is weak, and this is the worst thing in the stack, and there's no support in sight, and there's no buying pressure. If you do get out here, what do you do here? You get back in. And what size could you get back in? Remember, this is +10 in hand. 10R in hand. What's the worry? If you do get out here, you have to get back in. And you could put 2 positions on there because you got 10R of markets money. That's a good problem to have. Just do what you're doing, Jose. What you are doing is learning how to do this one position at a time. When you get 1,000 trades of what you're doing with the SSC, and then this is the collapsing dragon, that's the next pattern to put into your arsenal. Get 1,000 trades first, and then start playing the collapsing dragon. I think you've already got the SSC down pat, but there were times this week when your SSC rolled over and you just exited, but it led into a collapsing dragon. But you actually played that one today. The reason that you want the CD, the collapsing dragon, is because of days like today. Look at, let's see, here's... So this is Tesla. I didn't intraday trade it, but I could have. But what I want you to notice is that even right from the get-go, there's your OR3. This is a collapsing dragon. You're not going to lose money on that short. Here's your SSC. Here's a COTA 2. And now look at this. This collapsing dragon, you could be short here. And even if this gets you out, you get short again here. This is your standard risk in Tesla. And then smash. This is what was going on around 2 p.m. when you asked me why I didn't get out of the other one, because the whole market was doing that, and we were 10R in hand. So, market and sector and time of day and your chip stack, all of that goes into that kind of decision. On the other side, treasuries, which were in a compound critical state, if you were a treasury trader, uh, even if even if this got you short, that gets you long, and are you can't lose money on that trade. And this is the size of your risk box. That thing is 7R conservatively. And when this gets above +2 and it breaks above this, this is where you put in your second position and your third position. That one could have been 15R in treasuries. Just saying. I want you to see if we can see Microsoft. These were all the one. Yeah, so this is what we said yesterday. We took a look at the 5DD in Microsoft, right? So this was yesterday's close, and this is a daily chart. And we said this little recovery in Microsoft made this very interesting. The fact that you have the open and the close right in the middle of an exaggeratedly large range. This was in place. So we said you should probably put a little risk box around there. And then you could play intraday with just to the top and the bottom of yesterday's range. And then if it broke above this, you could add a second position and turn it into a swing trade. Well, what Microsoft actually did was gap up and then sold off. So there was actually a tactical trade that was suggested because of the 5DD framework. That's an example of core and turbo trading. So if we look at the Microsoft trade intraday, let me get our 3 minutes on here. Yeah, the intraday weakness. First of all, as soon as it breaks down below there, you're not going to lose money on that short, and you might have been able to play the Kata 2 here. But when this breaks, that's your collapsing dragon. You get paid there. And if you play it with the PSAR, because you have a Kata 2, this is your Kata 2 entry because you have two lower highs. So you can actually front run the CD by getting the Kata 2 entry here, the collapsing dragon here, exiting here, and then play that one again. So we knew that Microsoft was going to be in play today because of the enormous size of yesterday's range. Yeah, and then at 3 p.m. you have this. You actually have a little Kata 2. This turns into the summer. And look what it does. This is the VWAP magnet trade that takes you right back to the VWAP. And if your risk box is this, you have a 3R trade just here. And then when that collapses, I mean, you could have made a living on Microsoft all day. Just in the tactical trade, just on the basis of the inside range. And all of that was set up because of the enormous size of the previous day's range, which was this. That was yesterday's range. This told you that there was a lot of buying and selling pressure interest in Microsoft. And so when this thing broke out the gate right away, you knew it was going to be a trader. Harsh selling, strong buying, harsh selling twice. And it closed very poorly. So this is Do you think Microsoft is going to be in play on Monday? It sure is. Every fund manager in the world wants to buy it when it's on sale. What's it look like on a longer term time frame? Well, here's the 3-day. On the 3-day chart, right? This thing is perfectly aligned with a key support level. If that holds, that's going to be the mother of all buying opportunities. But if that breaks, look where this is heading. 280. That's a minus $30 move on a $300. That's a minus 10% sell off. Now, what would it take for Microsoft to sell off 10%? You would see the S&P, the Qs, and Microsoft and Apple all going down together in a big way. So that's your logic chain that gets you triggered in Microsoft. And one of the things that could make the Qs and the S&P go down was if there was evidence early of big weakness in Microsoft and Apple. So that logic chain works in both directions because Microsoft and Apple are such large components of the Qs. Bad days in Microsoft and Apple can move the Qs, which then sets up a reinforcing self-fulfilling prophecy, which can then make the tech sector suffer, which can make the S&P suffer. So Microsoft should always be on your radar as the conservative, low-risk growth opportunity in the same way that Tesla also affects the Qs and the S&P and the psychology in that way. But this is the modern grower of the future, whereas Microsoft is conservative tech. So those two symbols should always be in your watch list as a way to start understanding market psychology. Okay. That's what I want to say about that. Let's see if we can find our. I thought I opened that. I guess I didn't. Come on, dummy. By the way, one of the things that you probably ought to do, if you haven't already, is on my channel, on YouTube, I have a public playlist of the shorts. There's about 180 shorts. Every one of these is about a minute or less. There's about 180 of those little micro lessons, and you could just save the playlist. You'd be doing me a favor if you distributed that widely, or if you liked them, or let them play. But you can actually you you would benefit from those micro lessons. They're sort of like Scooby snacks. Yeah, so this is a collapsing dragon. That's perfectly played. So you're already well on your way. Just keep doing that. Tesla. And then, let's see. You had Para. This was an effort on Paramount Global. This is on the 1 minute. So you played the SSC and it failed here. Just for grins, let's go see and what happened on Para. If when the SSC fails, The collapsing dragon is the logical play to the other side. Now, I'm not familiar with para, but we could go take a look at it. Holy mackerel. Yeah, this is the one. Let's see, what time of day did you play that? Um, so that was at one. That was just before 1 p.m. And then at 1:35. Oh, you're on. Oh, I'm sorry, you're on the 5 minute. My bad. Just a minute. Yeah. So this looks like. Yeah, I think this was your play. Was the SSC, and then it failed. So you exited right there, and then all that thing did was went from 1275, you know, straight down for 4 bars. So that short uh, is like right there. So the lesson learned there is that. So if you exit that at oops, where are we? 1273 and just stop and reverse. So short at 1273 with a 7 cent risk. That looks like 10 cents. So short at 1273. Yeah, you're getting short right there with about that much risk. So that makes you 2R in a hurry. And then if you were still playing around and you took your normal, that would have been, I wouldn't advise that one because it's so late in the day. But the failure, when an SSC fails, it instantly leads to a collapsing dragon. The teaching point is that it takes a harsh winter and then a little bit of a recovery to set up an SSC. And the SSC must work right away, but if it doesn't, the stop leads you right into the collapsing dragon, which is our number one favorite pattern. So the reason the SSC is my number 3 favorite pattern is that when my third favorite pattern doesn't work, it puts me into my favorite pattern. But when the favorite pattern number 3 works, it leads you into a series of kata 2s, which is my second favorite pattern. So everything anchors or everything keys around the SSC. It is by definition, a harsh winter that leads into a compound critical state. With this tiny little wrist box right here, this harsh winter leads into a compound critical state. And there is your anchor point to the world of the collapsing dragon. This either works right away with an SSC or it fails right away with a collapsing dragon. The least likely thing is that it stays the rest of the day in some kind of choppy, narrow channel. If it does that, you don't lose any money. But whichever way price moves out of this compound critical state, you make money as long as you don't have a directional bias. And then your only job is, if it's long, is to get your risk out to no lose plus dinner for 2, or if it fails, to get your risk out and no lose per. What sets it all up is the adverse harsh winter, which says it's in play. Now, because this is going on the public channel, I just gave away the secrets of the kingdom, right? So be it. I have proven that you could tell 5,000 people this for free, and they won't use it. So I'm not really worried. All right, let's look at the weekend report. Still bullish normal, but significant short term weakness. The favorable volatility has now collapsed right back to the zero line, whereas if this goes into the winter, that's really bad for the long side. It's still marginally risk on, but it is so close to going negative that you should pay attention. The world market model went to 0% allocation. That's how vulnerable the whole world is. Um, Regression line fractal framework and the four seasons. This is just for the swing portfolio. So I look at these as my, let me zoom in on that. So I'm going to look on the things that are in the monthly, summer, and weekly summer. The strongest symbol is Caterpillar. And Microsoft isn't bad, and US Steel and Nvidia. So let's look at those. I'm going to go to daily chart and look at Microsoft. Microsoft's not in bad shape, although it is at a compound critical state. And Caterpillar has been very strong and is at a compound critical state. And US Steel, very strong. I mean, Jiminy Crickets. What more do you need to see than that? That's while the rest of the market is, U.S. Steel. And what was the other one? Trying to remember here real quick. Nvidia. Beauty. So all of those except U.S. Steel were those like tech giants, and they all had this little feature where it's at a compound critical state, and that is being threatened. But if this holds, you got all of this strong belief in it. So that was true of all of them: Microsoft, Nvidia, Caterpillar. Only U.S. Steel was at the top of its strength. So we've got to be able to integrate insights from the different time frames. You know, so the things that are relatively okay is those four are all very very strong on the monthly four seasons. That's monthly summer. This is monthly spring and monthly summer. And then I'm interested in the weekly spring and weekly summer. Look how good Caterpillar is. Monthly summer, weekly summer, and daily, it's just in the fall, so it's had a little pullback. Whereas Nvidia is not quite as strong because these three were in the daily fall. Nvidia has already drifted into daily winter. Now, I compare that if I was looking at the four seasons. I could look at some things way down in here that are really suffering, like daily fall or daily winter and weekly spring. So they're already much more vulnerable. So what does weekly spring and daily winter look like? It looks like Devon Energy. So compare U.S. Steel with that really favorable strong move to the weakness in Devon Energy, which is at the tail end of a long slide and ready to collapse. So the Four Seasons analysis allows you to very quickly decide what the broad themes are from the longer term time frames. And so I can use that as a heuristic. And then if I, instead of just using the swing, what if I looked at the S&P 500 and I just want to look at everything that's in the daily winter? How about that? Nothing wrong with that. And if I don't want things that are in the spring or the summer, I could look at these are the ones that are exceptionally weak, like CMA, and et cetera. So there's a lot of look how many things are in daily winter in the S&P 500. Or if I went with another personal list, like the intermediate size list that has about 80. I mean, I can look at all the daily winters. Is there anything even in the daily summer? Yeah, a couple. Lumber, wood, Brazil, and wheat and precious metals. What does daily summer look like? Well, let's go look. That's the wrong one. Hang on. Yeah, that's not failing. Brazil is actually in fairly good shape. The other lumber, and then wheat and precious metals is resisting the sell-off that's in the market altogether, and is actually pretty good-looking defensive play. So, uh, having the assorting tool or these administrative filter tools, like the TC2000 bundle, which is on sale, fellas, um, is pretty amazing. So I can go instead of my swing portfolio, I can just go to the. I can define any number of. If I want to look at the Dow sectors, I could do that. If I want to look just at the Dow 30, if I want to look at the large cap 1000s, the Nasdaq 100. What's the best reward to risk ratio in the DXCM? That's going to be nice. The tiniest little doji squeeze, and the 10-day high is very favorable. That's a 9-to-1 reward to risk ratio that terminated in a doji. Netflix is 6 or 7-to-1. If that kept failing, would you be surprised? No. But if it started to work, could that be interesting? Yes. So the ability to define the strategy you want to use, and then having power tools uh, that give you the targets and the patterns that you want, along with I have all of the auto framer information on this that I need to frame those trades basically automatically. So just want to share that with you. Anyway, you're on the right path there, Jose, for the collapsing dragon. Meanwhile, so as I look at the regression line fractal framework, what you can see is the danger the RL90, like we've been warning for 2 weeks, has rolled over. That's the green line. And then you have kind of a caught a 2 to the downside in the RL10 and the RL30. And then today you had a collapsing dragon and this thing already got through this little gray ribbon, which is a 30 period Bollinger Band on the RL270. That violated. Now this thing is in serious danger of making that fall all the way back to 415. There's no support in here whatsoever. That's very, very dangerous. Let's look at the 3-day sniper. Just some highlights for you. So the 3-day is like a fast swing on the 3-day, 9-day sniper health check. The 3-day bars is fast. The 9 is slow. It includes the MACD 4 seasons, and we just interpret this in the usual way. So this nice long move to the upside got violated right here, and it fell off that far, and that's where the PSAR flipped to. And when it rolled over, it made a lower high. So now we have the decaying PSAR. We have the dragon rolled over, and it just violated the collapsing dragon on the 3-day. So this thing is in serious danger, and there's your move to 410 or 415. On the 9-day, here was your long sideways chop. Here's where the 4 seasons turn to summer, which on the 9-day is a strong buy. But now it too has rolled over, and it got down to its own little PSAR. So today was even on the 9-day, the slow, that was an official warning. And if it falls back into this chop, yeah, it can get all the way to 390. When this stays in the summer and fall, look how long it stays there. But when it rolls over, ooh, bad news. And it rolled over at a lower high. That's why this is so darn dangerous. So this is how you can use standard sniper simplified indicators to help you in your market condition and market assessment. Okay. The market 150, this is the regular sniper. Here's our 150-day look back. Let me roll that up just a little bit. Yeah. Here was our 150-day low and our 150-day high. That was quite a move. You may not remember that back in here we were fighting this thing when it was around 380 and suffered all the way through this grinding move to the top. But then it just feels like that's where it's supposed to be. But no, Now here's the 30-day look back. Made a new 30-day low, a new 10-day low, a new 5-day low, and the bottom's dropping out of this thing. Look how volatile the 5-day range is compared to the 10-day range. That's how fast things can change in this volatile modern market. The 5-day range is fully 70% as large as the 30-day range. And everything made new lows today, and this is no man's land. Warning. That makes this a compound critical state, because this has retraced far enough from 460 to 430. That's like a 9% sell-off. So that feels significant. That now sets up a long-term buy on dip opportunity. Everybody that believes in this thing, oh, there's a dip that I can buy. And then this would be a giant Kata 2, and it will never test this. But they better prove that next week, because if they don't save it right here, it's officially into a bear market, which is a 10% correction from the high. And there'll be people talking about a return to the bear just as the silly season in politics is starting and guys are losing their mind. If they save it right here, then we should see some real strong buying pressure from the institutions. And where are they going to put that money? In U.S. tech, on everything that is sold off more than 10%. So Microsoft, Apple, Tesla, they're all on sale. So we'll see how much the big money believes in that starting next week, and we'll just go along for the ride. But if it fails, I know how to get short. If it recovers, I know how to get long. I don't care what it does as long as it moves large. There's our close in look at the 30-day. You know, when yesterday's low failed, that was an indicator. That was that sell off in the late afternoon. That's why I didn't get out of that trade at 2 o'clock, because that happened. And we're in the winter. And the next support level is all the way down at 415. In the blended monthly rebalancing portfolios, this will tell you something about market conditions when there's only one symbol out of 13 that's above its 4-month moving average, and that's Japan. That'll tell you something. And in the ETF 22, only energy and Japan are above their 4-month moving average. And in the ETF 32, the energy sector and agriculture, everything else getting murdered. In the Dow, you can see the strong names, and we saw a couple of them already. Caterpillar, great American company. Amgen was one of the few that actually had gains this week. IBM, United Health, Travelers, but none of the other usual suspects. If you were looking for things that could get murdered on further weakness, you can just use this to sort your way through it. Look at Intel down 10% this week. Holy smokes. World market model. The large caps in the U.S. are the only thing holding the thing up. Treasuries are so beaten down that it's actually an interesting buy, a low risk play. Commodities and oil, owning real assets. In the broad asset class, oil, commodities. In the sectors, energy. Everything is energy related that's in the greens. Let's see, we already saw the sniper trades of the day. Now, we're still in a bullish normal. So all of these are now firing on the channeling and the overreaction, and those are good, reliable signals in a bull market. You know, strong. It's been a strong bull, and it has now pulled back a significant level. That's a buy on dip opportunity in the U.S. indexes, and that's correct about 70% of the time. So if you don't believe in that, you're nuts. What that means is this is, as always, a compound critical state ready to fail in either or succeed in a big way. Next week is going to be a trader's delight. And you better pay attention to that. Use this weekend to craft your ideas. If you post those in the chat room for swing trades or daily trading plan, you'll get feedback. That's a wasted opportunity if you're not doing that. If you're a foundations course subscriber. Look at the Dow tactical summary. Look how many things are set up on the auto framer. Look how many things are breaking down over multiple time frames. Only United Health shows any kind of strength. There's plenty of 5DDs. Those are very reliable swing trades. So in a critical state, if the 5DD fails, you have a 5DDF pattern. So when you set that up, if it fails below today's low, you're short. If it goes above today's high, you're long. That's how you play that with a non-biased mindset. The entire market is in that condition. Look how many things are in the single digit on the RSI2. The entire market had a 2-day sell-off that it feels like a collapse of emotion. So that's all the nervous traders. You know who doesn't care? Big money. Is it a buy on dip opportunity? It sure is. Does that mean they will? No. But it means if they do, you're not allowed to be surprised. The ETF's even more pronounced. Look at how many things are framing up well. Look how many things are getting slaughtered. Look at all the collapsing RSI2s. The entire market is in panic mode. Poland threatening not to support Ukraine anymore, a change in the New World Order over there. Look at how many things are on the auto framer better than 2 to 1. Should not be surprised to see Home Depot and Intel and 3M on that. Those were all 5DD failures today. They're better than 5 to 1 on the auto framer. Here's all the framing data that you need to set up that on daily charts. The multi-time frame NDX is the tail of the tape. Look at how much is in the red across the board. What you should pay attention to are where were the things that showed evidence of strength today. Cliff and U.S. Steel, we already saw that. Look at the strength in U.S. Steel. Is U.S. Steel strong enough to resist the entire market selling off? No. But if the market recovers, are you allowed to be surprised if U.S. Steel benefits from buying pressure in the index? No, they should do well. Treasuries, metals and mining, defensive plays in gold, but emerging markets and Asia less Japan and silver. But look at everything getting slaughtered. Trading value, the things that are outstanding because they have large average daily volatility and strong frog quality numbers. Tesla, Nvidia, Intel, clean energy, regional banks. What do you see me trading on the hybrid frog or on the hybrid swing portfolio? Those things. Marijuana, Caterpillar, Devon. All right, that's everything for today. We'll get this published and posted. Use this weekend to prepare professionally. We got our book getting ready to go final and to be printed. I'm hoping it gets released on Amazon on 1 October. It is over 300 pages of solid scholarship and my best work. And you'd be honoring me and doing yourself a favor if you buy that. We'll send the link out when it comes out. But I would appreciate your support on that one. If we can get a lot of early sales and it gets noticed, then it can become accessible to a lot of individuals out there that I believe will benefit from our insights. So take good care, and we'll see you in the chat room soon.